Hello my friends. My name is Brandon. I kindly request that you support my new YouTube channel, which I have opened to bring everyone to financial freedom with a $0 budget. Please subscribing my channel and liking my videos. Let's quickly move on to our video. Today we're going to talk about the Bitcoin halving. The halving is an event that occurs every 4 years and it's a critical moment for the cryptocurrency market. In this video, we're going to explain what the halving is, how it affects miners and what we can expect for the future price of Bitcoin. To understand the halving, we first need to understand how Bitcoin is created. Bitcoin is created through a process called mining, where computers solve complex mathematical problems to validate transactions on the blockchain. Miners are rewarded with new Bitcoins for their efforts. But the number of Bitcoins that can be created is capped at 21 million. And as more Bitcoins are mined, the reward for miners decreases. This is where the halving comes in. Every 210,000 blocks, the reward for miners is cut in half. This is known as the halving. The first halving occurred in 2012, where the reward was cut from 50 Bitcoins to 25 Bitcoins. The second halving occurred in 2016, where the reward was cut to 12.5 Bitcoins. And the third halving occurred in 2020, where the reward was cut to 6.25 Bitcoins. The halving affects miners in a big way. With the decrease in the reward, miners will earn less Bitcoins for their efforts. This means that mining becomes less profitable and some miners may have to shut down their operations. However, it's worth noting that the price of Bitcoin also tends to increase following a halving. So, even though miners are earning less Bitcoins, the Bitcoins they do earn are worth more. It's hard to predict the future price of Bitcoin, but many experts believe that the halving will have a positive effect on the price. The supply of new Bitcoins is limited, and as the reward for mining decreases, the demand for Bitcoins may increase. This could lead to an increase in the price of Bitcoin. However, keep in mind that the crypto market is highly volatile and anything can happen. It's also worth mentioning that the halving has a direct impact on the overall security and decentralization of the Bitcoin network, as it reduces the overall amount of new Bitcoins being created, and by extension the incentive for miners to continue operating. Another aspect that should be considered is the long-term economic impact of the halving. As the reward for miners decreases, the overall inflation rate of Bitcoin also decreases. This means that the purchasing power of each Bitcoin will increase, making it a more stable store of value over time. This could make Bitcoin a more attractive investment option for long-term investors and institutions. Finally, it's worth noting that not all miners are affected equally by the halving. Miners with more advanced mining hardware will be able to maintain profitability, while smaller miners may not be able to compete, which could lead to a more centralized mining environment. This may be a cause for concern for some in the crypto community, as decentralization is one of the key principles of Bitcoin. However, it's important to note that this is a natural process of the network and it's something that the community is constantly monitoring. The halving is an important event for the Bitcoin community, and it has a big effect on miners and the price of Bitcoin. While it's hard to predict exactly what will happen, many experts believe that the halving will have a positive impact on the price of Bitcoin in the long run. So, it's fair to say that the halving is a complex event that affects many different aspects of the Bitcoin network, and it's important to keep all of these factors in mind when considering its overall impact. As always, it's important to do your own research and stay informed about the current state of the crypto market. Thanks for watching and we'll see you in our next video. Please don't forget subscribing my channel and liking my videos.